Thanks for clicking. A Canadian private mortgage lender, Romspen, is halting payouts to its investors amid a liquidity crunch, a lack of cash, after a string of delayed mortgage payments coming from the company's borrowers.
It's fine. It's fine.
The news comes just a few weeks after the company reported it was slowing its business in Canada, cutting the number of funded transactions as mortgage defaults continued to rise. The news adds another dimension to Canada's real estate plunge, and that is the role of private mortgage lenders, which grew significantly during the pandemic. So what I want to do today is go over the Ronson story, discuss why it's not paying its investors, go over the role of private mortgage lenders in Canada's real estate correction, and then discuss what to look for next. Speaking of next, we have a big week next week with the Canadian Real Estate Association set to release the national statistics for October, and we're also expecting Canada's inflation rate, with many hoping that it's going to follow that of the United States, which saw cooler than expected inflation for October. We'll obviously have updates out on both on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this Romspen story. As mentioned, private mortgage lender Romspen is halting payouts to its investors amid a string of defaults. So if you're an investor with Romspen and you want to take your money out, you're going to have to wait, as the company's borrowers have not been making their mortgage payments. In a letter to its investors, Romspen said that it will temporarily defer payment of redemptions until it's more clear when borrowers will repay the loans and the fund can get cash from asset sales. The letter to investors came after just a few weeks ago, Romspen announced that its non-performing loans, the amount of loans not being paid, had jumped up to 40% of its fund, about 15 to 20% higher than usual. So a lot of the mortgage loans that were provided by Romspen are not being paid. But what happens next?
What are you going to do, strong-arm me?
Not quite. As borrowers continue to not make their payments, Romspen has plans to seize and sell the subject property, the property upon which the mortgage is secured. The company attempted to reassure its investors, saying it's not worried about the value of its assets, the properties on which it holds these mortgages, as it only lends at 65% loan to value, and it wouldn't be in real trouble unless real estate prices dropped by 30%. And this makes sense when you look at the composition of the private mortgage. Let's say the property was worth $500,000 and Romspen lent out $325,000, or 65% of the loan's value. If that property drops in value by, say, 20%, Romspen still has $75,000 in equity in that property, enough to pay for legal fees, for cleanup, etc. And real estate fees. So the company says it will be okay so long as the real estate market doesn't drop by 30%, the 30% being predicted by so many banks. But this does raise another issue in Canada's real estate market correction, the role of private lenders. All of the private mortgage lenders that jumped into the market in 2020 to 2021. According to FSRA, private mortgage lending shot up from $13 billion in 2019 to $22.4 billion as of 2021, with about $13.5 billion being lent out in Ontario alone in 2020. And besides the higher cost that we've all heard about, there is a big difference between private mortgage lenders and traditional lenders. Private lenders, in general, lend out at 1 and 2 year terms, and at the end of that term, they want their money back. They want to see the mortgage switched to a traditional lender, and they get all of their principal amount back.
Have the money by tomorrow, and there won't be any problems.
But that switch to a traditional lender is becoming increasingly difficult. Take the mortgage that we talked about earlier, with a valuation that has shrunk to $400,000 and $325,000 owed. In general, traditional lenders will only loan up to 80% loan to value, and that $325K with a $400K valuation is 81.25% loan to value. So you can't switch that mortgage held by that private lender to a traditional lender without coming up with additional funds. And that was just with the 20% market drop. There have been many predictions, which we talked about on this channel, of a 30% market drop, which would make it even more difficult for homeowners to switch their mortgages from private lenders over to traditional lenders. And while most traditional lenders will allow homeowners to renew into a new term, into a new mortgage, private lenders want their money back, especially in a declining market. And I've already seen examples of this on my end, where homeowners were in a 1 year term with a private lender. That private lender sends the renewal notice, except the renewal notice says that they are not renewing their term. So that homeowner now has to requalify to try to get the mortgage switched over to a traditional lender. Not only do they have to requalify at a higher interest rate using the standard qualification rules, but they also have to do so with a home that is worth much less money. And unfortunately, in a few cases already, I've seen this become a big problem, and the homeowners have opted to sell their house. So private lenders, in many cases, in a declining market, want their money back. They're not willing to auto-renew their mortgages, even if the homeowner has made all of the payments. And that's not even to mention the fact that the massive growth that we saw in private lending in 2020, 2021 was a result of investors looking for yield, looking for a higher rate of return as the central bank's interest rate was basically 0%. And that's just not the case anymore. While private lenders were able to comfortably loan on a property with the understanding that it would continue to go up in value, we now have assets that are declining in value, increasing the risk for private lenders, making it less tenable, less attractive for them to stay in private lending as they look for better yield, better profits elsewhere. So they're going to be even less likely to offer those renewals at the end of those 1 and 2 year terms. And as we talked about, this has been leading to some homeowners having to sell their homes when they can't switch their mortgage to a traditional lender. And this is likely to only continue as this market drop goes further. As we see home values continue to decline and these 1 and 2 year terms come up for renewal or not renewal as these lenders try to pull their money out of the market, it's quite likely that more and more homeowners are going to be forced to sell their homes, not due to non-payment, but because they can't get financing elsewhere. And as more homeowners have to sell their homes, this puts out more supply without a corresponding level of demand. Prices drop even further, simply snowballing the problem. Whether or not those prices will continue to drop to that 30% level where companies like Romspen and I'm assuming many other private mortgage lenders will see even more issues with the value of their assets remains to be seen. However, we will continue to have updates out on Canada's real estate market on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.